If your money is sitting in Chase, Bank of America, or Wells Fargo right now, today's video is specifically for you. I'm covering 5 things. New scam tactics in 2026 that are targeting customers of these 3 banks directly. Some are more sophisticated than anything we've seen before, including the growing use of artificial intelligence in fraud schemes. A simple 10-second test you can use to evaluate suspicious text messages. Changes affecting overdraft protection and account fees that could either save you money or quietly cost you more if you have the wrong account type. A free feature available at some major banks that can get your money into your account before the official payment date. Several practical details about how these accounts actually work that can make a meaningful difference in your financial life. Before we get into it, subscribe and turn on notifications. Banking rules, fraud tactics, and account features change constantly, and the changes that hurt consumers are often discovered only after money is already gone. Let's start with scams, because this is where some of the biggest losses are occurring right now. According to the Federal Trade Commission, bank impersonation text scams are among the most commonly reported forms of text fraud. Consumers have reported losing hundreds of millions of dollars through scams involving payment platforms such as Zelle, while the FBI has documented billions of dollars in losses from internet crime overall. These are not just statistics. They represent real people who received what looked like legitimate messages, responded, and lost money they may never recover. The classic bank impersonation scam. Here's how the traditional version works. You receive a text message that appears to come from your bank. It says something like, "We detected a suspicious charge of $412 at a retailer you don't normally shop at. Did you make this purchase?" Reply yes or no. It feels like a normal fraud alert. You reply no. A few minutes later, your phone rings. The caller identifies themselves as a fraud specialist from your bank. They may know your name, your address, or even the last 4 digits of your card. They explain that your account has been compromised and tell you that you need to move your money to a safe account to protect it. This is where many victims lose everything. Why these scams are becoming more convincing. Scammers are getting better at making every step appear legitimate. Messages often mimic real bank formatting. They may include information obtained from previous data breaches. Caller ID spoofing can make calls appear to come from your bank's actual number. Artificial intelligence has also made voice fraud more convincing. Researchers have shown that modern voice cloning tools can produce highly realistic voices using only short audio samples. This technology is increasingly being used in fraud schemes, making it harder for people to rely on their instincts alone. But here's the most important rule. No legitimate bank will ever ask you to move money to a safe account to protect it. Not Chase, not Bank of America, not Wells Fargo. If someone tells you to wire money, transfer funds, send cash through Zelle, or move money to another account for protection, you are dealing with a scam. It does not matter whether the caller ID matches your bank. The person sounds professional. They know personal information about you. They claim to work in the fraud department. The request itself is the red flag. Hang up immediately. Do not call back using a number provided in the message or shown on your caller ID. Instead, use the number printed on the back of your physical debit or credit card, or open your bank's official mobile app and contact customer service through verified channels. A simple test for suspicious text messages. Many legitimate bank alerts come from short codes, 5 or 6-digit numbers used for automated messages. If you receive a message claiming to be from your bank that comes from a regular 10-digit phone number, that's a reason to be cautious. However, this is not a foolproof test. Banks occasionally use multiple messaging systems, and practices can change over time. The safest approach is to avoid clicking links or replying to unexpected messages. Instead, open your bank's official app. Log in directly. Check whether there are any alerts or notifications inside your account. You can also ask your bank which numbers or short codes they use for fraud alerts and keep that information for future reference. Watch out for QR code scams. Another scam that is growing rapidly involves QR codes. Criminals have been caught placing fake QR code stickers over legitimate codes on parking meters, restaurant tables, and payment kiosks. You think you're scanning the real code, but you're actually being sent to a fraudulent website designed to steal your payment information. Before scanning any QR code that involves money, look closely for signs that a sticker has been placed over another code. Check whether the code appears damaged or misaligned. If anything looks suspicious, pay another way. That 5-second check could save you from handing your card information directly to scammers. Beware of lookalike websites. Scammers also register web addresses that closely resemble legitimate bank websites. Examples might include wellsfargo.com, chase-secure-login.com. At first glance, these addresses can look convincing, but they have nothing to do with the real banks. Instead of clicking links in texts or emails, type the bank's web address yourself or use the official mobile app. That simple habit dramatically reduces your chances of landing on a fake website designed to steal your login credentials. Now let's talk about something that directly affects how much money you keep or lose: overdraft fees. An overdraft happens when you spend more money than you currently have available in your account and the bank covers the transaction. Historically, major banks often charged fees of around $35 for doing so, even if you only overdrew by a small amount. In recent years, regulatory pressure and competition have pushed banks to change many of these policies, and Chase, Bank of America, and Wells Fargo have responded differently. Bank of America made some of the biggest changes. It reduced its overdraft fee from $35 to $10, eliminated non-sufficient funds, NSF fees, and removed transfer fees associated with Balance Connect, which allows money to be automatically moved from a linked account to help cover a shortfall. If you have both checking and savings accounts with Bank of America, setting up Balance Connect can provide an additional layer of protection against unnecessary fees. Chase still charges an overdraft fee on eligible transactions, but it also provides customers with extra time to bring their balance back above zero before certain fees are assessed. Because policies can vary by account type and may change over time, it is worth reviewing your account details inside the Chase app and enabling low balance notifications. Those alerts can give you time to make a transfer or deposit before fees become an issue. Wells Fargo has also eliminated NSF fees and offers overdraft protection options that can transfer money from linked accounts without a transfer charge. Like Chase, Wells Fargo provides time to address negative balances before some fees are charged. Low balance alerts can make those protections much more useful because they notify you immediately when your balance falls below a level you choose. One important rule many customers do not know about involves Federal Regulation E. Banks generally cannot charge overdraft fees on one-time debit card purchases and ATM transactions unless you have specifically opted in to overdraft coverage for those transactions. That means if you never opted in, your debit card purchase may simply be declined when your balance is too low rather than being approved with an overdraft fee attached. Some customers prefer to opt in because they want transactions to go through even if their balance is temporarily low. Others prefer to opt out because they would rather have a purchase declined than pay a fee. The important thing is to know which option your account currently uses. Open your banking app and look for overdraft settings or overdraft preferences. Make the choice intentionally rather than letting an old setting determine it for you. Another feature many customers overlook is early direct deposit. Wells Fargo offers a feature called Early Payday, which can make qualifying direct deposits available up to 2 business days before the scheduled payment date. No separate enrollment is typically required. Once qualifying direct deposits are established, the feature generally works automatically. Certain Chase accounts, including Chase Secure Banking, offer access to direct deposits up to 2 business days early. However, eligibility depends on the account type, so it is worth checking the details of your specific account inside the app or by contacting Chase directly. As of 2026, Bank of America generally does not offer early direct deposit on standard checking accounts in the same way some competitors do. Since product offerings can change, it is always worth asking customer service whether any current account options include early access to deposits. Here is something that surprises many people. Traditional savings accounts at Chase, Bank of America, and Wells Fargo often pay very low interest rates compared with high-yield savings accounts offered by online banks. Meanwhile, many online banks, while still FDIC insured, have historically offered rates that are significantly higher. The exact numbers change over time, so do not focus on a specific percentage. Instead, compare what your current savings account pays with what high-yield accounts are paying today. On larger balances, the difference can amount to hundreds or even thousands of dollars per year. That is why many financial planners recommend a split approach. Use a major bank for checking, branch access, and ATM convenience, while keeping long-term savings in a competitive high-yield savings account. Zelle is built directly into the apps of Chase, Bank of America, and Wells Fargo. Transfers usually happen within minutes, and once the money is sent, recovering it can be difficult. That speed is convenient, but it also creates opportunities for scammers. One common scam involves someone impersonating your bank and claiming there is suspicious activity on your account. They instruct you to send money through Zelle to secure your account. That money goes directly to the scammer. Another scam targets people selling items online. A supposed buyer claims you must pay an upgrade fee or convert to a business account before receiving their payment. There is no upgrade and no incoming payment. The only money changing hands is the money you send. A third scam involves someone claiming they accidentally sent money to you and asking you to send it back. The original payment may have come from a stolen account. If the payment is later reversed, the money you voluntarily sent back may still be gone. Instead of sending money back yourself, contact your bank and ask how to handle the situation properly. 3 simple rules make Zelle much safer to use. Only use Zelle with people you know and trust. Never send money because someone contacted you first through a text, email, or phone call. And treat Zelle the same way you would treat cash. Once money leaves your account, recovering it may be difficult. There are also several practical features that many customers never use. All 3 banks allow customers to create balance alerts inside their mobile apps. Set one for whatever amount makes sense for you, whether that is $50, $100, or another number. That simple notification can help prevent overdrafts and unnecessary fees. If you suspect fraud and need customer service, ask to speak directly with the fraud department. When reporting suspicious activity, be clear and direct. Tell the representative that you are reporting unauthorized transactions and believe your account may have been compromised. Explain exactly which transactions are involved, ask about replacing cards or securing the account, and request a claim or case number before ending the call. Finally, even if you use the mobile app every day, periodically review your statements. Banks are required to notify customers about changes to fees, terms, and policies, and those notices often appear in statements or statement inserts. A quick review every month can help you catch changes before they become expensive surprises.